Well, hello again, everyone. We will begin in about 10 minutes. 10 minutes to get everyone logged in. All right, we're here again this Wednesday. At about 8 minutes, we will be starting. All right, everyone, I hope you're joining, and we will begin with our session this morning in about 5 minutes, 5 minutes to go. Stand by for a great day. All right, we have about 3 minutes before the session starts. Don't forget to notify your friends. Tell them we're live. All right, we had about 2 minutes to go. 2 minutes to go. This is the entry page, and there's a lot of good information here. You might want to take a paper and pencil and copy some of this information down so that you have it. I'm going to finish my coffee, and then we'll get started. That's an iced coffee, first thing in the morning here. Okay, we're counting down the last minute to the session start. Get ready, get your seatbelts on. We're going to have a great session today. And we are live. This is Nailing FX, and we're going to do simplified FX trading today. All right, so let's get started. I'm coming to you from Bien Hoa, Dong Nai, Vietnam, where the weather this morning at about 9 o'clock was very warm, 83 degrees Fahrenheit, 28 Celsius. I'm coming to you from the Pegasus Plaza in downtown Dong Nai, Vietnam. I'm with you every Wednesday throughout July at 10 a.m. my local time, and that'll be about 4 a.m. in London, in the UK, there for you folks that are following. And in the New York East Coast time, it's 11 p.m. Tuesday evening, Tuesday night, and we're going to do the Nailing FX. All right, so here's my July schedule. Today is Wednesday the 8th, and next Wednesday I will be broadcasting on FX Street. FX Street. So make sure that you tune in to FX Street. That's a live free broadcast. And then on the 22nd, I'll be back on YouTube, and the 29th, back on FX Street. If you want to get the schedule put into your uh, calendar, just go to, let's see, www.tradingwithufos.com/OPA, OPA, and then click on the Get Together button at the top of the page. You will have to register, and that's a free registration. So then you'll be able to keep on track with not only my schedule, but also the other instructors that are presenting here in the FX trainings site, as well as other asset class instructors. So if you're interested in any other asset classes, please make sure you check those all out. So let's go ahead and get started with the disclaimer. We have to do that. The following videos, clips, demonstrations, presenter guides are for educational and instructional purposes only. Tradictive and Trade with UFOs and its presenters provide training information purely for the purpose of demonstrating a method of using the products. Users understand that all the content used in the information presented is purely for demonstration purposes only and are not instructions to take trades. We never tell you to take a trade, and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through any presentation or demonstration does not indicate in any way the results you may receive by using the products or methodologies we offer. All right, with that said, let's get started. Today is my 6th session in the Nailing FX series. Today we're going to review the trade from the last session. We put on a nice trade last session, so we'll review the Euro USD trade. I've got a snapshot of the video that when I put on the trade. I keep saying we, but it's I. Again, no direction to you to do the trades. We'll review the actual setup. We'll show you the correlation with TradingView, how I monitored and managed that trade, and then we'll have some hunting for potential new trades. So get ready, here we go. All right, so here's the review from last session. As you can see, there is the snapshot of the video at the time where I concluded that I would want to go ahead and put on that trade. So you see this vertical yellow line is the time frame that I put on the trade. Okay, we analyze that time frame. I put on a limit buy. You can see here my cursor. Here's the limit buy down here, and the stop down here below, and the target. And if I recall correctly, the stop was about 40 pips, and the target was about 80 pips. So it was approximately a 2-to-1 trade. And I was looking at this. Now, this consolidation of the profile meant that price could go up, it could go down. Looking down below here, the MACD was still below the zero line, but it was showing some strength. So with it still being below, it indicated to me that there was a possibility that price could, in fact, go down to get filled at our entry, a limit order entry. But as we always do, we always compare the MT4 chart that I use and trade on with the trading view chart. And you can see here again, here's the same time period. We were in, I believe, the 4-hour period. We went through different time frames and determined that the 4-hour was the best to get the trade put on. And so looking at the 4-hour, I saw that we had a zone here, a buy zone directly underneath. But what I also saw was that there was another buy zone right next to it, right there. So basically what we have to consider is that this is one big zone, The buy zone is one big zone. So what I did was I didn't want to get in right at the top of this zone because my stop would have had to be at the bottom of this zone. And, that was just too big of a stop for the potential return hitting up here in the sell zone. So we were looking for price to come down, get filled, and then turn around and go back up into the sell zone and make our pips. And so there wasn't, it wasn't a real good risk reward. It was still slightly good. It was a little better than one, but I decided that seeing that price had already come down to these areas, down to the lower part of the zone, I decided that it would be best if I put in my limit order just down near these, not at the bottom, but just near the tails, the mid tails here, and then my stop goes below. Looking down here at the climate, I could see that the upward movement, the blue dot started to fail, and we got some small red dots here, which indicated that price might actually want to come down, which is what we wanted it to do. All right, so that's the overview of looking at the last week's session when we put on this trade. So here's how the trade shook out. We put in a stop down here at 1.11587. You can see this is taken directly from MT4. And you can see the price here is where we entered the trade. And down here is the price for the stop loss. Okay. Somehow I got that a little mixed up here. Should be 8.4 instead of 8.7. I might have read it wrong off the chart, but you can see here's where we put the stop below. Here are those two zones. We put the trade just below those two zones. And then we had the limit buy. Here's the limit buy price. And then we had the take profit just under the zone. Okay. Now I was playing it a little safe. Okay. And this turned out to be a reward of 2, a risk of 1. So it was a 40 to 80 risk reward, 2 to 1. 2 to 1, 2 times the risk was the reward. Okay. And so here we can see a little better what happens shortly after, or not actually shortly after, because this was a 4-hour chart. So about 8 hours later, price did come down. You can see it spiked down here on this bottoming tail. and took us into the chart and then started to move up, getting closer to our target. So that's what we saw then. All right, so here's what happened. You can see the time frame now. Remember, we put the trade on. I put the trade on. I keep saying we, but I put the trade on Wednesday, near the end of our session. Okay, so we put it on about, I think it was around 10:45, 10:50 my time. And so Thursday, I decided, oh, let me take a look and see what our trade is doing. And so here you can see this was where we entered. Okay, here's where we entered. And 8 hours later, it hit and then turned around and started to travel up nicely. And it got up to the top here. So this is what the chart looked like on Thursday, okay, the next day at about 1 o'clock in the afternoon. Now I had a meeting call with some clients at 2 o'clock, so I was looking at this at 1 o'clock and saying, this looks interesting. Looks like it's going to hit the target, okay? And down here, the MACD actually was confirming. You can see here that it stayed below. It stayed below, showing that there would be weakness, right? And then the strength started to come in. And so we can see that this was the pivot point right here where price came up, all right? So I decided at that point, well, maybe I want to manage this trade a little bit. And what I did was I pulled the stop down from a 40 pip risk and moved it up here to a point where I had a 44 pip gain, and I was at that point in a free trade. So at that point, the worst thing that could happen to me was that unless we had a lot of slippage, which I don't think would have happened, but it's always a potential, right? So I moved the stop, the protective stop. Now it's not only a protective stop, it's a guaranteed win. And so you can see that I moved it to 1.2443. Originally, it was down at 1.1194. Again, I picked up the 7. And it was a 34.3 pip free trade. Okay? And so you can see here, originally the stop loss. Here was the original stop loss on the setup, and then the new stop loss here, okay? So as soon as you change the stop loss, it changes the features here, and so you must capture the information before you move the stop loss, otherwise it's lost because it just gets replaced here. And again, you can see that I paid a commission. This was a mini trade, one mini. And so I paid a commission of 70 cents for this trade simply because I'm using a pro version, which means that the broker is giving me raw spread. Okay, so the broker is not making any money, supposedly, on the spread that he's offering in a raw version. Well, the broker has to make money, otherwise, how's he going to give us the information that we need? So the broker charges a commission. So his commission is about 1 pip, or whatever the fraction happens to be. So on a 1 pip, if I had put on a standard lot, the commission would have been $7. Because it's a mini, I have 1/10 of that risk. And so it's 1/10 of $7, which is 70 cents. And if I were trading in micros, because my account might be very, very small and I'm trying to build it, takes time, the commission at that point would have been 7 cents. Okay. You also see here, if I get my cursor going here, all right, watch the cursor here. You see where it says swap, swap. Okay. What does that mean? The swap means that at the end of the day, basically everything gets reset, and the interest that is due or interest that is paid will be applied to your account. Think of it as going to the bank. When you deposit money into your bank account, you get interest in return. So if you withdraw money from your account, you're going to have to pay interest. And so remember, you're using two currencies. So one of those currencies you are buying, putting money in, and the other one you are withdrawing. So whatever the difference is between those two currencies in terms of interest, you will then have the swap. Sometimes your swap will be positive and you will gain a few cents, a few dollars sometimes, or you have to pay. So here you can see the swap was 1 day swap cost $1.14. And there's a calculation. It's based on a 365-day year, and it's all calculated out, and it's applied at the end of the day, usually around 5 o'clock. The brokers, they have different time frames. You have to know what time frame your broker is making those adjustments, because during that time frame, you really won't be able to trade. Okay? So you have to know that for your particular broker, and they provide you with that information. So you can see that at the time that I changed the stop loss, I had a profit of $65. So I was better than 3/4 of the way into a profitable trade. Okay, 60 would have been 3/4 of the 80. All right, so that's what it looked like when I set up my stop loss. All right, so now to manage this trade, I then switched over. Okay, you can see here is the trade at that time. So I don't know what happened. Here we go. Okay, so something happened to the computer. Sorry about that. I hope that everything is still working and we're still processing here. All right, so here we are, and you can see that I switched to a 15-minute chart. Why did I switch to a 15-minute chart? So that I could get a better perspective of the details on this trade, okay? So that if this trade started to tumble on me, turn around and drop significantly on the lower time frame, I would be able to see it, where it wouldn't be as visible on the 4-hour chart. So I switched to a 15-minute chart to watch what was happening, and I saw that the trade was still strong, still moving up. And so again, I moved the stop for another about 10 pip of profit to lock in. So it was actually 9.8 loss price, moved up to 541. 541 was the new stop. And you can see that happening here. I was looking at this, and basically, how did I determine that I was going to put the stop back here? Well, I looked back to find the last significant pivot, which was right here. You can see this pivot right here. And I put my stop just below the brown line that I have, or just below that low pivot point in the chart. So I locked in that price, and then we continued to monitor. So you can see now the time is 1:11 my time locally in the afternoon. All right. So I made another adjustment, and now you can see that at 1:25, about 10 minutes, 15 minutes later, I took another quick look, and I could see that price had moved up significantly, very, very close to my target, very close to the target. And on the now looking at the 15-minute chart here, okay, but it has started to drop. It has started to drop. So I had enough room. I had enough room to go ahead and at that point move my stop very tight underneath my brown line here, which remember when we talked about the profile with the 4 lines, this is when you're crossing the median here, and price wants to go in the other direction. So I'm really concerned about that. Additionally, what I saw down here on the MACD was that I had a high point on the MACD, and price had moved down. Where is my cursor? Okay, price had moved down and then started to rise and then dropped again a little bit, and I wanted to draw that line to that pivot, but that was not a good trend line on the MACD to draw because it cut through the signal line. And when price moved back up here and then dropped again, that was a high pivot, and so I drew my line at that point. So you can see I drew it at that point, and that showed me at that point that we had a significant divergence where the MACD was below, was dropping, coming down, while price was actually moving up. All right. So that gave me a little pause for concern, and I wanted to make sure that I didn't give back a lot of pips on this trade. Okay, you remember I keep talking about pips. I'm not talking about dollars. I never think about dollars. I'm thinking about pips, because as soon as you accumulate pips, the more pips you accumulate, your account. So seeing that, I then again moved my stop up, 612 stop loss, and I moved it up to the 671. So I added another approximate stop loss, and you also, but again, having the concern, I see that price on the MACD, the MACD breaks that trend line, which tells me at that point that price has gained strength again and is likely to go up. So I felt very, very confident at that point to move my stop, be conservative, lock in, okay, lock in at that point. And my anticipation was, and my expectation was that I would meet the target. All right, so let's continue, see what happens after that. Here is the target line. I had to put it in green, and here was the stop, and you can see what happened at 2 o'clock, 2:23 actually. I was on another call, and then I came back, and what I saw was that price had actually turned around. You can see the MACD, it did rise and then dropped again, rise and dropped again. If I had been able to monitor and manage that, I would have seen that drop at this price, and when price moved back up, probably lock in a little bit more. But things are what they are. And so what happened was, you can see down at the MACD, price did drop, and you can see it come down here. Although the MACD is still above zero, which indicates that we're going to have that there's still some strength to the upside. Okay, still some strength to the upside, but it was too late. This red candle here came down, and stopped me out at this level up here, this green line here, which is the 671 when I had made that last adjustment. And if I had made no adjustments at all, my stop would have been down below here, and I would have gotten taken out down here at 44 pips, profit. So, 6 of one, half a dozen another. Sometimes it works in your favor, sometimes it works against you, but I played a little bit more conservative and locked in those profits up here, okay? And locked in those pips up at the top side. Now, what happened next? You can see here, here's 1423, almost 230. Here is what happened at 230. Looking back on this, what happened to price? It turned around and zipped all the way up, and geez, I woulda, coulda, shoulda, all those things. You can think, no, you made money. You made money. You made better than 3/4 of your target. Is that a bad thing? Are you going to be sorry for that? No. Okay. Don't replay in your mind and say, because you're just going to confuse yourself. Because next time, when you leave your stop way, down, and price turns around and takes you out lower and does this same thing, you're going to beat yourself up again. So you made money. I made, how many? 68.4 pips, something like that. So it turned out to be a very, very good trade. Did get stopped out. And okay, so it gets stopped out, but it gets stopped out with a nice profit. And it still was better than 1-to-1. It was about a 1.5-to-1 in terms of profit. So this turned out to be a nice trade. I'm very pleased with the way it ended up. Remember the week before last, we had 2 little trades that we tried to push. I tried to push simply for the purpose of demonstration. This time we played it a little bit better by the rules, and you can see the trade worked out much nicer. All right, so now it's time for us to go ahead and see if we can do a trade. And something tells me that because I don't see any movement in my, I don't see how, Ho, 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 ho. It looks like that time that I had that little computer glitch, things got squirrely. Let me see what I have to do here. I'm sorry about this. See if I can adjust this. All right, here we are. And I don't know how much of the presentation was lost here. Let's see. All right, so let me go ahead and do a real quick recap here. Maybe you heard the video and didn't see the actual slides. I'll just pick up here from when I switched over to the 15-minute chart. All right, the 15-minute chart, basically 44 pips, and then I moved it again based on the 15-minute chart a little bit higher, so that I locked in about another 10 pips at that point. And then, as I was saying before, I saw the MACD made a high point, this high point here, dropped, made another little high point, but trying to draw that trend line through that high point intersected with the signal line, so that trend line would not be valid. And so then when I went ahead and drew that through this high pivot here, I could see that there was a significant divergence. Price had moved up much higher. The MACD did not respond in the same way. So that caused me some concern, and I went to further adjust the stop. You can see I went from the 612 stop loss down to the 671, adding again another five pips or so to that. Okay, at just after 1:30 on Thursday, you can see the price again broke above here in this area here, broke above on the 15-minute chart, indicating that there was strength coming back to the upside, and it was safe at that point to go ahead and move the stop. So I moved it rather tight up under the price action. So I was watching that, and I had some relative confidence. I was confident that at that point, seeing the MACD had moved up that way, the price would reach the target. So that's one of the reasons why I went ahead and moved up to that level. Unfortunately, what happened was, and again, as I said, at 2 o'clock, I had to be on a different call, And when I got back about 20 minutes later, I saw that price had actually dropped down again. And so the MACD had made another high point, and you can see that that high point was higher than the previous high. So price was, in fact, at this point, um, correlating with the MACD, and so that high was valid. And then it turned and started to come down. And as it came down here during this time frame here, it took me out with the stop, that tight stop that I had put in earlier. So it was a nice trade. At that point, I had a profit of 68. I had been up to 70 something, few pips higher, but 68, close to 70. Um, it was a good trade. I can't complain about that trade. Better than 75, almost 80%. 80% of the trade was locked in and made some good pips. So here's what happened at about, well, this is what it looked like at 2:30. You can see between 2:23 and 7 minutes later, price had not only risen on this 15-minute, um, so and then it just shot up way up to here. Okay, so I can see down here that what did price do again? The MACD continued to show that there was strength to the upside. It was strength that was weakening because we can see the MACD pivots are dropping, the red pivots showing that the MACD is actually decreasing, but it never went below the zero line. It never went below the zero, indicating that all or most of the strength had dissipated and was gone. It did, in fact, turn around and shoot back up. So, I didn't hit the target, but still, I was very satisfied and happy with this trade. All right, so now let's see. Again, I apologize. I don't know if there was some disruption in the presentation. I had a little glitch here. Maybe the signal got dropped. The internet provider, who knows? But let's go ahead and see if we can go ahead now and hunt for some real trades. So let's go ahead, take this and get rid of that. All right, so now I'm going to bring up here we are. All right, so here is the daily. We'll start at the top. I'm going to start with the daily on the Euro USD, okay? And what it looks like right here on the daily Euro USD is that we are in a buy zone. How do I know it's a buy zone? Well, I see the little UFO, the little spaceship here, and the line above and below in this area. This gives me a relative understanding of the size of the zone. The spaceship, the location of the UFO itself, says that in this UFO area, within this circle or this oval of the UFO, that's where there is the most consolidation of unfilled buy orders. So there are some unfilled buy orders down below, and there are others at the top, but the consolidation is right here. And it makes sense. If you look to the left here, you see what I call is a baseline where we have a lot of opens, high, lows, and closes at relatively the same price all the way across here. So there was a lot of activity right in this same price. So even if you uh, didn't want to, subscribe to get the UFO information and have that easily available, you could look at a chart and look, over the last 10 to 20 periods and identify where there's a consolidation of price, where did the most price action happen. And you can see we have a lot of like little dojis and hanging men and all those little, things that you can read from Steve Nissen in his books about candlestick charting. But it's not necessary. Your eyeball already sees that. You see that? You see that flat area right in there? Look across that. There's so much happening in that area. So that's where this spaceship, okay, where this UFO identifies that in this area. So even if you didn't have the zone, you could still find that high concentration area, okay? And then look to the left and find a significant pivot, which is right here, okay? And you could identify where you think a stop might go. And you could identify, the area where if price left, you can see again, look at here is an open, here is a close, here's another open, here is a close. Here we have an open just above it. Here we have a close just above it. Here we have another open right at that line. Here we have another close right at that line. Here we have an open. Here we have a doji right at that line. So there's a lot of activity, lots of activity happening right in that area. So the mathematics, the algorithm, it does the work for you. But if you rely on a calculator to do all your math, and then your calculator runs out of batteries, what happens? You don't know the fundamentals. So that's something that you should keep in mind. And that by knowing that also helps you with a confirmation of, is this a strong buy zone, a buy area right here, okay? So what do we see? We see that we have the UFO sitting here on a daily chart, and we have this zone encompassing the UFO. And what we have to do is we have to look down, and take a look at the auto climate. See the auto climate here, okay? And so what we see is that the heavy, the thick, the big, however you want to call it, blue dots or turquoise dots or whatever color, I just think they're blue. And so they started back here 2 days ago. We're in the third day, and I'm looking up here, and it says that our chance for continuing to the upside, the strength, is 4.36. And so for about 5 periods, 5 days, so there's a little less than 2 days left for price action to go up. Now that doesn't mean that after 2 days it's going to go down. It can continue, but the highest probability is that, according to the algorithm, and the algorithm only knows what it's been programmed to do. So it's not like your human brain that can take into account multiple parameters and different situations. Okay, So uh, it's telling me, yes, price is probably going to go up within the next 2 days. All right, so let's take a look now and see what our chart says. Okay, so here's the corresponding MT4 chart. So we can see this right here. And what do I see? I see price has dropped, or I'm not price, but the MT4, not the MACD, excuse me, the MACD has dropped, but again, is staying above the zero. So that means that there is still strength to the upside, although that strength has diminished somewhat. Okay. And what I see here is in the current today, right now, at this point, it looks like price wants to actually come down a bit. Okay, it was slightly rising, and you can see that same perspective. And what we see here in the profile is still 100% sequenced to the upside. So we can see that we have blue over red, over green, over brown. So that means that the profile is telling us that price still wants to go up, even though we see that the blue line has curved down. Now, when the blue line crosses the red line, okay, remember, the blue line tells us direction, the red line tells us we're on the right track, we're on the right street. The green line is the guardrail, and then we have the median brown line. If we cross the brown line, it's more than likely that price is going to go further down. You can see here, back here, when price crossed the brown line, we were still significant. There was still significant strength showing in the MACD. So even though it crossed here, um, it tells me that, remember when we did our study several sessions back, that we would be looking at a likely retracement, a pullback, rather than a change in direction. So we would watch that. And again, we're looking at a daily chart. We move down to a lower time frame. So let's go ahead now and go down to the next lower time frame, 4 hour. Okay, 4 hour, and I need to do the same thing here and go to my 4 hour chart. Okay, and open it up a bit. Open it up. Okay, so in the 4 hour, what it's telling me, if we can take a look here, all right, what it's telling me in the 4 hour, we already see that price, again, this profile, only 3 lines, but it's the same profile. We can see that now we, according to the 4 hour chart, we are in a sell zone, right? We're in a sell zone. Let's look across here. We can see that we have a level here and the same level over here coming across, okay? And we've got some things happening down in here. So it's a sell zone here with the auto phase. Remember the auto phase? The auto phase said, I think that this is an area or this is a point where price is going to change direction. We had to get a confirmation. How do we get the confirmation of the auto phase? Well, we're looking for a close below the low of the auto phase. That's the alert. That's the alert. And so did we get that? Yes. It was several periods later, and we had this huge move to the downside. Okay. That huge move to the downside. And that confirmed that this was a top. And notice that that happened right at the edge of the sell zone up above here that already existed. Okay, so that sell zone existed. Then it came down, moved through here, and there was some activity, some sideways movement, which the algorithm again determined there was a new zone, a sell zone being created. And down below here, if I can move this up, okay, down below here, I can see down below here, I can see a buy zone, and they're overlapping buy zones. So based on the fact that it's overlapping buy zones, I need to be concerned about putting a stop down below this zone, combining the zones together, putting a stop down below here, okay? So if I put the stop down below there, okay, let me go ahead and put a line, horizontal ray, looks down here about there, okay? That looks like about the right place to put a stop, okay? Now, where would we think about entering? Okay, so we're going to expect that price is going to come down. We could put it here, but that looks like a big stop. And if we put the entry right here, remember, I'm always concerned about where does my protective stop belong before I do anything else. I subscribe to the SET approach. Stop, entry, and target. So I know my stop belongs here. Here my entry. If I put my entry right above or at this buy zone, where is my target? Well, my first target is going to be right here. And that's not a good risk reward. So what I need to do is I need to move my target down so that I have at least a 1-to-1 for that to happen, all right? And this is again on a 4-hour chart. So I'm thinking that, again, maybe what I'd want to do is put my entry kind of between those two UFOs, okay? And I can see visually that this is greater than 1-to-1 here, all right? And what is the auto climate telling me? It's telling me that it's not a strong move to the downside, but it is a move to the downside. So let's go ahead now and take a look at the 4-hour here. And this is telling me, so we have sequencing to the downside. 1, 2, 3, blue below red, below green, below brown. This would have been the alert period. That's the alert period right there. And so we see here's the alert period. And when did price close below that low? Again, that big move down. Now, here's one of the things that I notice as a trader, trading a long time now, is that when you have a significant move down, it's very likely, very likely that if you have, and you know, this is an explosive move to the downside, this 4-hour move, a lot of pips in comparison to the prior ones. So this move to the downside was very strong, and usually there will be a recovery. There'll be a pullback, 50%, 63%, those Fibonacci numbers, pull back. And so I watch for that. And you can see what happened is it pulled back and hit the guardrail, did not close above it. and then started to drop again. Okay, now we just came up with a little bit. So we're seeing that the strength is decreasing. Now let's go ahead and take a look at the hourly chart. And so what do I see at the hourly chart? On the hourly chart, I can see that price has already basically made its hourly drop, and again, if I find where the low point is right here and I draw to this, it's telling me that the MACD has gone lower, so I have divergence again than this. So this is telling me, the MACD is telling me that price wants to go up on the hourly chart, which it did cross. The blue crossed the red here and started to go up. So this may be a move to the upside. We'll have to see about that. Quickly, before we run out of time, let me go ahead and look at the hourly here. And you can see here, these are the levels that I had pulled over from the 4 hour, right? Those are the levels from the 4 hour. And I've got 1, 2, 3. They are not right on top of each other, but they're significantly close. And so this looks like this would be a fairly decent trade, even on the 1 hour coming up to here. So let me go ahead and mark this. Did I get that? Mark this one up here. All right. So now let's go ahead and see how we can put on this trade in the last few minutes here, a few seconds of the session. I've got to go back to my chart here. I'm going to put it on. I've got to look at where is this. Take a look. And so that is right kind of where price made its move to the upside. Okay, just below that level. Okay, and so I'm going to go ahead and put my buy order. Whoops. Go back here. Where are my? Get it up here. All right, so down in here. So at this level down here, I want to put on a buy limit. There's my buy limit. Okay, and from what I saw here, I want to put my stop just below this pivot here, where again the auto phase was telling me that that is a low, and we confirmed that, and that would have been a nice trade at that point, even waiting for the blue dots to become heavy at this level here to go up. And then auto phase was confused and kept thinking that that was the trade. But let me go ahead and go back here, and I gotta close this up just a little bit, pull this down right about there. So it looks like I've got a 62 pip stop. Whoops, sorry, I did an error. There's my buy limit. I cannot pull that down because it's not an active order. I will have to go to the modify. So I'm going to modify and stop loss. Stop loss. Just go ahead and run some quickly. And now I can move my stop loss where I need it down here. And that is about a 30 pip. Let's make it 30 pips. Okay, about a 30 pip stop. And let's quickly look over here and see, I want my target to be above or just about the top of this red period right there. So I'm going to have my target sitting, looks like up here, right up in here. So I've got to go ahead and again modify, modify. And now I'm going to take my profit to the upside, zip that up a little bit, and then go ahead and say modify. And it's down in here. I don't want that down there. And I'm going to push that up to about there. So that's an 80 pip, a 30 to 80 risk reward up at that level. And we'll let this go and see what happens next week. I will go ahead and review this trade for you, and we'll see what happens. I am out of time, so have a great week, and we'll get together next Wednesday on FX Street. So long for now.